getting my display set up here. All right. So PPP loans 101. Whoops. You can tell I haven't used PowerPoint recently. All right, so PPP loans, Paycheck Protection Program. Just a little bit of backstory. We all know that they came with the CARES Act that was voted and put through Congress last March 2020. Originally, it was injected with almost $350 billion, but that amount went through in, I think, just shy of 2 weeks. It went through very quickly. So then about a month later, they added an additional round of funding to it that lasted for quite a bit longer. And the first round closed in August. Now, as a lot of us have heard, round 2 started. It was passed in December and it reopened in January. And it was injected with another $284 billion, which has been also lasting quite a bit longer than that very first round. So a lot of that has to do with some rule changes that they implemented and different stipulations that allow for smaller businesses to access it versus larger ones that got in during the first round. It also expanded eligibility to include our 501c6 nonprofits, like our best chamber here that we have. And it also expanded the payroll costs that it could be used for, and that also qualifies for the loan amount. So it helps a lot. So the main question that everyone has is, do I qualify for PPP loans? And for a lot of entities, the answer is yes. You really look at how your business is organized and your tax filing status, and that's going to guide you to how you calculate your potential loan amount. So if you are an S Corp, your LLC, depending on how it's structured, can certainly qualify. A lot of nonprofits, and even self-employed individuals and independent contractors. I know when PPP started, a lot of those individuals who were self-employed did not know if they, could qualify for this loan, since technically they didn't have employees that they paid. But if you have a Schedule C, you are able to do that. So the first draw was that first round, and the qualifications were that you had to have no more than 500 employees, and that you must have been in operation covering the period in February 15th, 2020. And then the second draw that was introduced in January lowered that employee count. So you have to have no more than 300 employees to qualify for the second draw. And it also asks that you prove that you have a 25% reduction in gross receipts and gross revenue, or gross revenue. Those are kind of interchangeable words, between 2 comparable quarters. So quarter 2 from 2019, quarter 2 to 2020, showing that there's at least a 25% reduction in 2020 from that matching quarter. And then the requirement is still there that you were in operation February 15th of 2020. So one other semi-confusing thing is we are in the second draw, second round, but it is still possible for a business who did not get a loan from the first round of funding, they can still get that first draw loan during this period. And depending on the timing, if they're able to get that first draw loan, use the money on approved purposes, and get that loan forgiven, they could then potentially apply for a second draw loan. So you, of course, have to qualify for both of those, but it is possible to still backtrack and get in on that first draw if you miss it during that first round. And that's actually what our chamber did, because when the first round of PPP funding started, 501c6 nonprofits did not qualify. They added those, so our chamber was able to get a new first draw loan during the second round of funding. So a little bit of a tongue twister there, but Hopefully that makes sense. I touched on this briefly. So I have a lot of people who ask me, I don't have employees, I don't issue paychecks. How can I qualify for a paycheck protection program loan? But you are considered the employee of your business. So that means if you file a Schedule C and you show a profit on that Schedule C, you can potentially qualify for PPP funding. So there are a lot of small entrepreneurs that I've talked to who had no idea that they could get in on that first round, and we've been able to get them funding since then. So some of the required documentation that we would need to see that we submit with the application would be some proof that you were in operation during that February 15th time period in 2020. So if you do have employees, that can be a payroll statement. It can also be a bank statement showing operating costs or an invoice from completed service. And then we need to see your tax form, so your 1120F, your Schedule C, and we can use either 2019 or 2020 numbers for the second round of funding. So some people have been able to use 2020 numbers if they show a better revenue picture. Others fall back on 2019 if their 2020 tax forms aren't available. So if you are a independent contractor or a self-employed person with no employees, really the requirement for documents stops right there. You might have to provide a copy of your 1099 if you are an independent contractor that's paid from another company, but really the documentation is that simple. For those who do have employees, we really just need to look at the proof of the amount of wages that you pay those employees for whichever year we're looking at, whether it's 19 or 20. So those are going to be, if you have employees, you're familiar with what 941s are. They are an IRS form, and it shows the taxable tips and wages that you paid to your staff. We also look at a payroll statement. You can even include what you paid for unemployment tax, and you can include what you paid for employee benefits. All of those can go towards calculating your potential loan amount. So that for first round and second round, we would need to see that. For second round, for the draw 2, if you're looking at that second loan, that's where we need to see that 25% reduction from 2019 to 2020. So most businesses use some form of software like QuickBooks or some revenue tracking that can generate reports. And usually those are perfectly fine. You can print off a quarter from 19 to 20, give them both to us, and we can see that reduction. If you use an accountant, they should certainly be able to help you get those reports and get the documents that you need. Now, forgiveness, so these loans are all potentially entirely forgivable. So the requirements for you as a business is really that you spend those funds appropriately. So that means you're spending it on at least 60% is being spent on payroll costs. You can use the other 40% on other things that are considered eligible expenses. There's a long list, but generally it's going to be rent, utilities. You can even use it on protection for your workers that's related to COVID-19. That includes face shields, those big plastic shields that we see businesses setting up, those kinds of things. But most of our applicants can easily use the loan amount on payroll, and that's probably the easiest to document. For your individual who is an independent contractor, or you don't have any employees, that payroll is essentially going to be payroll to yourself. You want to spread it out over, a few weeks, the 8 weeks to 24-week period, and you want to document, make sure that you keep copies of checks, but you would write it from your business, essentially, to you as payroll. And I know that can be kind of confusing, so if you have any questions, definitely let me know. But we submit the forgiveness application. It's just a page or two, very easy to complete, and we submit that with the payroll documentation or the invoices and receipts that you have that shows that it was spent on covered eligible purposes. So if you have the first draw loan, once you have spent all of that, then we can submit that forgiveness application. And once that's forgiven, that's where you could then go back and potentially access that second draw loan. So the real question for a lot of people who think they might qualify for this is, how do I do this? And when would I actually physically be holding that money? And the answer is really pretty quickly. It does depend on the institution. Everyone has their own processes, but at Sterling Bank, we do everything we can to get that as quickly as possible. So we will help you work through the application and gather all the documents and make sure that everything paints a perfect picture for the SBA when we submit that application. We are working with both existing clients, of course, and new. So if you don't have a bank that is doing the PPP lending, or if you weren't satisfied with how your current institution handled it, give us a call and maybe we can help you out. So right now we're seeing about a 24-hour turnaround time from the SBA on approval of completed applications. And Sterling Bank is able to close that loan and get money into your hands the very next day. So if you just have questions, or if you really need to submit that application, let us know, give me a call. My information's up there. You can also email me, and you can find us on our website at stirbank.com. So it was pretty quick, but I'm ready for questions if anyone has any.
If you do have a question, would you type it into the chat room so that we know who we can call on? And I'll start off with one while we're waiting for that. Nikki, when you say that it is payroll, is that all pieces of payroll, or is that just salaries? So for instance, like all of the taxes, if there are benefits maybe that somebody's getting paid, or is it strictly just a salary? Do you know?
Well, it can be any of those things. So the benefits that are paid towards an employee also count towards your payroll costs.
Okay.
So if you don't have those additional benefits that you pay for an employee, you can just count their salary, or if you have some kind of tracking of what you pay your individual employees, we just need to see that money totaling that loan amount went towards those employees. I'm not sure if that answered your question.
Yes, it did. So here's another one that we have. I started an LLC, and hang on just a second. I started an LLC in March of 2020. I would not qualify, is that correct? Since they didn't file taxes in 2019?
Misty or Todd, I would probably defer to you. My understanding is that you would need to have a completed first quarter in 2020.
Yes, that is correct. Can you hear me? I just want to make sure you all can hear me.
Yes, Todd, we can hear you.
Okay, I apologize. I'm not, like I said, savvy with Zoom, so I want to make sure I was doing it right. But no, that is correct. I do think they would allow if you had to have one quarter completed in 2020. Unfortunately, we have to kind of backtrack that because we're trying to bring it back to pre-COVID levels. So unfortunately, we wouldn't be able to capitalize on that.
Yeah,
Well,
because
thank you for the answer. That's sad, but totally understandable.
yeah, it does bring up a good discussion though of new businesses. Unfortunately, starting that late did miss the cutoff requirements for showing that you were in business February 15th of 2020. But if you happen to start in January of 2020, you can still show a 25% reduction in gross revenue from that first quarter. So instead of using a quarter in 2019, we would compare back to that first quarter of 2020. And if we have a quarter 2, 3, or 4 in 2020 that's 25% less than that first quarter, then you could potentially qualify for that second draw loan as well.
And she says, thank you very much. So another question that I have is, I know you covered it in your presentation, but I'd like just a little more clarification. If it is a, let's just use hairdressers. A lot of times the owner will rent out booths. So does that owner qualify? Do the people that are renting the booths qualify? Do you know how that would work?
I can take that, Nikki, if you'd like me to.
Sure, go ahead.
Typically, so the owner, if they were a salaried employee or they paid them some kind of wage, they would qualify because they have those W-2 wages that they could qualify their basis on. And then as well, if they filed a Schedule C, we can look at line 31 net profit. So that specific owner with those W-2 wages on top of the profit that she received in that calendar year, we could base that for her loan amount. But that is a situation where I know some hairdressers that rent, they're usually a 1099 employee. So that's where it can be a good referral system where if somebody doesn't qualify, because all I have is 1099 employees, that they can say, oh, hey, I do know people that I give a 1099 to, and they can come to the bank and they file a personal Schedule C, which shows those gross revenues, and after they expense out, and if they were to have a line 31 net profit, then they would qualify as well.
Very good.
Yeah, so to break that down individually, so you have your salon owner, let's just say that's one person, and then they have 2 contracted hairdressers. And so that owner pays them as independent contractors. So they receive a 1099 at the end of the year, and they report that on their own tax returns. Each of those 3 individuals could potentially individually qualify for their own PPP loan. So the 2 hairdressers, who each have their own Schedule C where they show their income, could potentially qualify. And then that salon owner, who, even though he doesn't have W-2 wages to pay to other employees, he can still use his own Schedule C filing or however his business is structured, if there's a net profit on there, and use that information to qualify.
Okay. That makes a lot of sense. Do we have any other questions? Can you guys think of anything else that would be helpful?
Well, I know one question that I had for myself, because of people I know in my life, was whether those who own a franchise, if they would be able to qualify for PPP funds. So obviously they have a parent company that they report to, but typically they're locally owned businesses. They have their own LLC, they have their own tax filings. And the answer is yes. Generally, they can qualify as well. They would have to show the same documentation that everyone else, and then they would need an additional number that they register with for their franchise. But they can also, I know we know a lot of our favorite franchisees who are chamber members, and they could apply for PPP loans.
That's great. And that's one of the reasons I want to make sure that we share this out as much as possible so that people can come back and watch this. And we do have another I'll finish my sentence. We had another question pop up. But yes, let's make sure that we share this out as much as possible. So I think you covered this, but would you help us understand it? What if someone's a sole proprietor?
Do you want me to take that one, Nikki?
Sure, go ahead.
If you're a sole proprietor, file a Schedule C. That would be a document that you need to look at from your 2019 tax return to see if you had a net on line 30. And that line 31 would be what we use to determine potential loan.
Misty, you were cutting out just a little bit, so I'm going to repeat what you said. So
Sure.
as a proprietor, if you file a Schedule C with your tax return, as long as you have a net profit, what you're looking at is line 31, that it's labeled as net profit. That's what you would look at. And if you have something there, then you would qualify for a PPP loan. And so we have calculators that we use that we can help you figure out exactly what that loan amount is. But it doesn't really matter the size of the loan either. We have borrowers who have received a few $100s and then more than that. But even if you didn't generate a lot of profit for your business in one of those previous years, you can still receive some funds that would probably help you out and get you over a hump through this hard time.
And I'll just reiterate that, if you just show a net profit and you don't have to have any employees, and if you're concerned about how you have to spend the money, you're paying yourself. That's what's neat about this program, is that you're able to pay yourself and you can qualify for full forgiveness and not have to pay this back. And like I said, it doesn't matter the dollar size. Just for an example for this group, if you had a $5,000 net profit on line 31, you would qualify for $1,000. That's to be your loan amount that we could get you. Then we could easily get fully repaid with you not having to pay anything back.
Yeah, it's really important for everyone to understand that these loans are fully forgivable. As long as you can write that check to yourself as payroll, if you're that sole proprietor, you can get that loan fully forgiven and you will not have to worry about paying it back, which is such a blessing, really.
Thing of any more programs that might be in the works?
I personally have not. I'm not sure if Todd or Misty have heard anything currently.
Unfortunately, PPP has kind of been our lives, and it's direct with the banks. I know there's been specific, the Economic Injury Disaster Loan directly through SBA. They were qualifying for grants up to $10,000, which incorporated $1,000 per employee. And then if you did qualify, they would also offer you a loan that could be maybe over and above that amount. Like I said, that's directly with SBA now. I know they put some more money in that program specifically, but the banks aren't involved. So that's directly with them and on their SBA.gov's website. So I don't want to say any more than that, but that is my minimal knowledge that I do know.
Thank you. Are there any other questions that we can ask these experts?
I think the one other thing that I did not include is currently the second round of PPP funding is set to expire March 31st of this year. I think we're all hopeful that that will be extended, but as of right now, that is the end date. So this is a time-sensitive, program and time-sensitive information. So if you just aren't sure, just ask, because the worst thing you're going to find out is that you don't qualify. But if you never ask, you're never going to know.
Very true.
And it will not take us very long at all to tell you that answer or give you a loan amount that you could qualify for.
Yeah.
And also, I'll say for people out there that may have got, like Nikki hit on a little bit, maybe got their first draw loan elsewhere. And if they're not through that process, or if they need help, and they want to come back, that you don't have to go back to the same institution that you got your first draw loan with. So we'd be glad to help you on that second draw if we can.
That's good information.